The next topic and what this lesson will cover are trading ranges. We need to put into context just what trading ranges are and how we're going to view them, how we're going to look at them, and how we're going to utilize them to our advantage. Like most everything else in this course, we're going to break trading ranges down to something very simplistic so that we can put them to use to our advantage when we can spot them, and they do happen over and over and over again. So before we dig into a trading range and how we utilize it, a couple of points of interest that are extremely important. Number one is when I'm trying to identify a trading range, I want to use a larger time frame than I would traditionally trade from. Why is that? Because I want the broader picture. I want to see from the longer time frame, which means more data on the chart. I want to see a trading range that may be lasting a week, several days, even longer. Maybe it's a month. And therefore, it gives me an opportunity to see where the high end of that range is and the low end of that range is. Some analysts will call those high value areas. Some will call them low value areas on the bottom. That's fine. You can call them whatever you like. We're going to call them the top end of the range and the bottom end of the range. So if I'm trading intraday using a 10-minute chart, or some traders like to use shorter time frames, then I want to see a trading range that's outside of a 10-minute chart. I want to see a trading range that's on an hourly chart, for example. Or I want to see a trading range that's on a daily chart, for example. Now, when identifying a trading range, does it have to be exact to a penny or to a tick on the bottom low end of the range, or to the tick on a high end of the range? Not really. That's not what we're after. We're after a conceptual view of where the market is generally finding resistance and where the market is generally finding support. You see, I've drawn two lines. They're not to any particular numerical value. I just drew them based on the bottom end of a range that I can identify looking at this 60-minute chart, and around the top end of the range. And the reason why that's important is because the top end of the range, where it's an approximation, and the bottom end of the range, another approximation, has nothing to do with where and when and why we're going to take a trade. That's why those two things are disconnected. Let's put into context a little bit deeper what exactly we're looking at and why I take it from this approach from a larger time frame down. What we're looking at is a trading range that developed over about a 3-week period of time. So if you take the beginning of the range that starts about where I have the vertical black line, and you take the end of the range on the right-hand side where we have a second black vertical line, and that's where on the top end you can see that the market began to break out of the range. So we'll just limit the range to this area in between the vertical black lines. That represents around 3 weeks worth of trading. Within this 3-week period of trading, there could have been dozens of trades in the ES that were viable trades that we would have been more than happy to take, as long as the trades were setting up in accordance to our strategy that we've learned throughout the course. All the items that are important, the right candle counts. Do we see a change in trend pop up, a doji candle? Are we into a level of resistance? Are we into a level of support? When you have a trading range, that is an added level of certainty, at least for that point in time, that you may be at an extraordinary level of support or an extraordinary level of resistance. Of course, at some point in time, you're going to break down from a trading range, or you're going to break out and above from a trading range. But until such time, you can trade within the range. What this does is understanding that the larger picture is in the middle of a longer term trading range gives you the ability to take the trades that are at extremes on the top and extremes on the bottom with more certainty, more confidence. It's an added level of evidence that can add to the viability of the trade, assuming the other technical factors were present at the time, You would love to know from a larger time frame perspective whether you were at the high end of a range or the low end of a range. And that's, in and of itself, the main reason why we like to look at trading ranges from the longer time perspective.